Greetings, everybody. This is Jeff Scott, and this is my weekend market update for January 16th, 2022. My email address, should you need to contact me, is hgsidoc@gmail.com. I titled this week's Will Friday's Reversal Lead to Further Stabilization on the Markets? Another title I thought about was, Are we too bearish? Disclaimer, this is for education purposes only. Any recommendation in the sphere of education, not investment advice. I'm a doctor, not a broker. I demonstrate tools that I use in my daily trading, and this is for educational purposes only. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. Options are considered risky. You should be educated in their use before trading them. Please review the information for the options and information or industry consult. As I mentioned last week, and I want to cut these down. Last week was 38 minutes. My goal is to get these to less than 30. I will do separate educational programs that could go much longer. But when I do my market updates, I want to stick with a review of the market and not explain every dot that I look at. I'm also going to let you know that you're going to be seeing more and more wealth charts used in these presentations. From time to time, over the last 20 years that I've been doing these videos, I have brought in programs that I thought were interesting. I have not given up my main programs to date because nothing was able to replace what I was using. It takes something pretty special to get into my everyday use, and Wealth Charts has now done that. So you'll be seeing me using it more and more, and probably less of some of the other tools, certainly the other trading platforms, etc. Speaking of wealth charts, as I've said several times over the last 6 months, if you want to buy wealth charts, you want to get it during the summits. Why? Because it's a summit. There's discounts. And there'll be multiple speakers. Some, like me, will be using the program. Others will be using some of their own tools. But I just want to call it out. It's not in 15 days. It is tomorrow. Tomorrow. Here is the URL. Please use my link. I'll put it in the email and on the YouTube site if you wouldn't mind. You know, a funny story. I followed Rob Hoffman for a long time, probably as long as John Person. And I think 2011 is when I bought his first tools. So I think I bought John's tools maybe 2009, 2008. So similarly long time. I was in Rob's chat room for a little while back when I was retired, meaning in between companies. And he actually called my house not too long ago, maybe 6 months ago. And I told him I couldn't talk right now. My wife has more control over me than my trading. She was making me dinner, but he didn't hold that against me, and we've become friends since then. Some of the things that I will be doing in the PowerPoint were because people requested them, and I'm still learning to find things in wealth charts or in HGSI, and so I've been using some things to supplement it. When I figure out how to do that, I get to save money and eliminate tools. TNX, 10-year Treasury, you could see it didn't do much this week, and the 30-year as well. So they moved a little bit, but not much considering all the information. So they were pretty flat on the week, but there was some intra-week movement. Prices in red here, or orange, on the small mid cap Russell 2000 on the left, the larger cap Russell 1000 on the right. Prices going down. Interestingly, the AD line on the large caps is still holding. If I look at the NYSE, last time I talked about, are we going to get a head and shoulders here? Well, you got a shoulder, you got a head, and you have another shoulder coming. This is worrisome because you clearly got lower highs, and now we're going to see if we're going to get lower lows here. But this is something I'm watching. Now, to be honest, it takes 1 or 2 good days to get this back up there, but it's something to watch. The major indexes have dropped, and the ones that are sitting here, and I won't say looking better, but the yellow, the Qs, and that bluish green, the Dow and the spiders are holding up better than the small cap IWM. Since rates didn't do much, you could see the bonds fell a little bit, but mostly sideways action, down a little bit. I like to look at breadth. stocks above the 200 on the left, stocks above the 400, and they both came down a tad this week. Now, interestingly, if I look at the 3-month new high, new low, it came down a lot. Here it was last week, but it's not into reversal range. Those who've been watching me for years know that this has almost become a go-to signal for me, that when we start to get down on the bottom, markets almost always go up. And when we get up to the top, I know it's time to take some profits off. The McClellan, we did get a higher high on the oscillator on the daily. I'm not even looking at it right now. We're not at new highs on the S&P 500 anymore. Buckets, looking at every stock in the S&P 1500 and looking at where they are within their Bollinger Bands. Talk about a split market. This is a market where the haves are doing better and the have-nots are doing worse. And they continue to get more and more bifurcated. You can see here that half the stocks are above the midline, half are below the midline. Very neutral looking market. And I don't have a overcorrection below the Bollinger Bands or above that give me a signal. Now, the HINDY is something I've been following for years. It's typically looked at on the NYSE, and it does predict most major corrections. There also can be false alarms. But we've had some HINDYs fire in November and December on the NYSE. What's interesting on the NASDAQ, which is not classic for the Hindenburg Omen, I've had five signals in the last 7 days. Again, more signs of haves and have-nots in this market. That's worrisome, but classically we care about the NYSE. I think it just tells you that the NASDAQ, maybe you've got some tech that's doing well because you've got to have new highs, but you have a lot of small cap growth in the NASDAQ that are doing poorly. Now, the Kahunas are an indicator which is looking at a percent beat change day over day. The deeper the color, the bigger the Kahuna. And just showing you that we had Kahunas to the downside across most of the major indexes in the last week or two. And you could see, if you look at the Woody indicator here, that we are chopped with some bearishness showing up on clearly the NASDAQ and the small caps. If I look at sectors, sectors are mixed as well. And again, you know what's working in this market. You know that communications is not working. You know that healthcare is not working. While, hold on a second, healthcare is not working, but energy, financials, and industrials have been working. So it's a market that you have to be on the right side, and you got to be in the right industry groups, which is really drives my trading. News-wise, you're going to have some jobless claims on Thursday. It looks a little bit lighter, perhaps because of Martin Luther King eliminates Monday, and it's not the weekly or monthly unemployment reports. But there could be Fed heads speaking, and anytime somebody talks about rates and easing the market, that's a fit. And you can look here, there's a lot of red arrows. I mean, you got banks, Goldman Sachs, Bank of America. You got the first of the airlines coming out. And you got my favorite around earnings time, which is Netflix. My quote here holds true to this day. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. One of the things that people ask for is to bring back the market thoughts. Markets closed mostly higher on Friday as they overcame mixed bank earnings, downbeat economic data, and a sharp rise in rates. For the week, the market did close lower. Interest rates rose despite retail sales for December, industrial production capacity, and preliminary consumer sentiment all decreased on a month-over-month basis. Now, for some reason, my 10 and 30 feeds did not show much of a change. And if I look at the TLT, it was minimally down. So I don't think there was a giant move, although maybe the shorter time frames had a bigger move in the rates. As you can see, the markets are down. We failed to hold rallies early in the day, midweek, and then we reversed off the low on Fridays. Breadth continues to worsen. The HINDY pattern's got to keep me alert as to could be some damage coming. The markets, I think, could be due a short-term rally, and I'll show you why we're at support on the major indices. I've buffered the sell-off by buying leaders in the right groups: Devon, Diamondback, Cliff, FCX, Tech Minco is probably my largest holding right now, and Wells Fargo. Last week we talked about Continental Resources, another one that I'm holding now, which was one of the ones I liked last week. As I said, markets are closed Monday. I'll be speaking, I believe, 12 to 2, and then Saturday morning. In regards to the Netflix trade, it looks like earnings don't come out to Thursday this week. I got to wait and see what the market's doing. It's just not been behaving well, Netflix in specific, although they did bounce some on Friday when they said they're raising rates. So again, not to beat you up, come to this event. I will try and listen to everybody I can. I learned so much from this event. And as I said, the platform is really, I really have been pleased with the platform. If there was a little hiccup in the recordings because I hit the wrong thing, so I apologize for that. All right. Now, if we look at the major indexes, I'm in wealth charts. Now, one of the big things I like about wealth charts, and no disrespect to any other programs, is I don't have to do updates. The bad news is I have to wait till the updates are done by the program, but things are server-based. So some of those multi-hour scans that I would run in TradeStation, I don't have to do anymore, nor do I have to do data updates. I think that's a positive finding. And during the day, at night, it's real time, especially if you want to go intraday, which is not something I have to do. If we look at the spiders, you can see, you know, despite the weakness in the market, the spiders have been in a major move up, and there's nothing negative about this chart from a longer term perspective. And why do I think the market could be due a bounce? Because we've come back to trend line support, which we've tagged several times. Now, do I expect us to go on to new highs? Well, that would certainly be wonderful, but I think we're more likely to trade up, look for resistance here and come back down. I don't think we're done yet, but I think we could get a couple days respite. Qs, pretty much the same thing. You know, look at the Qs on a long-term trend line, and they pull back to support. This red dot is actually a wealth signal, sell signal, or bearish signal. One of the things you get from being an annual member of wealth charts. Pretty good signal if you look back and visually backtest. If I look, that was the Qs. If I look at the diamonds have been doing well, but they've pulled back to their 50-day moving average and gave a bottoming tail. So a lot of things on these tell me they're in near bounce range. And then if I look at the IWM for the small caps, you could see how close it is to this line here, which is where it's bounced before multiple times, although several times, you know, sort of every other time it doesn't make it all the way there. So that's a lot to like and suggest that we could see a bounce. The VXX, the number is much bigger because there was another reverse split. Whenever you see stocks, ETFs that have lots of reverse splits, it's because they've really gotten beaten up. And it's really hard to be bullish looking at this chart. And then the dollar broke down on Thursday, broke down through the 50. Wouldn't surprise me to see it come back up here and retest that 50. But as I've mentioned before, my stocks seem to do better when the market, when the dollar sells off. Now, I can do other things in this program that give me a sense of what's going on. I like ratio charts. So what about on the left, big cap versus small cap? Well, when it's going up, it favors big caps. Yes, it gave back a little bit on Friday. This is an hourly chart, but make sure it's the hourly chart. Here's the hourly chart, pull back a little bit on Friday. But if I look back on a daily, large cap has been winning. Why do I like the hourly? Because I'm going to pick up changes quicker. How about looking at S&P growth versus S&P value? And growth, this is on the daily, has been taking it on the chin. And if you look at the hourly chart, you could see how ever since the middle of December, beginning of December, growth has taken over, has been beaten up into submission by value. That's not good for a high growth stock investor. I have a number of ratio charts. Now, I can't do these charts in a lot of programs. Either I haven't figured out how or I can't. It's a simple thing in wealth charts. Again, part of why I'm so enamored with this platform. Just from a big perspective, if I'm a stock investor, I want to see the SPY doing well versus gold. Now, if I just change that to a daily chart, you can see stocks have been way outperforming gold. Someday it's going to reverse, at least on the one-day chart, gold actually, 1 hour chart picked up on Friday. SPY versus the TLT, this one here. Again, if I'm a long-term bullish stock guy, I want this pattern. When it breaks down below the 50 on this ratio of the spiders to bonds, I know I'm in trouble, and we're doing very well here. Yet on the short term, we actually, um, yes, we saw the spider continues to do well, ticking up versus bonds. That's awesome. Spider versus Fang, the spider has done well versus Fang on the hourly. If I look at a daily chart, you can see, whoops, I forgot to change that. Let me highlight the right one. Now let's look at a daily, and you can see that over time, the spider has done poorly compared to the Fang. But if we just look at the most recent time, the spider is doing much better than the Fang. Again, some of these growth stocks not in favor, something you already know. On the bottom, you see a similar pattern for the spider versus the IBD 50 ETF, where the spider is clearly leading. And then Kathy Wood's ARC, look how poorly it's done versus the Qs. So I get a lot of sense of what's working, what's not working. And I can look also at the S&P 500 sectors, and these are daily charts, and they're ratio charts versus the spider. It sort of neutralizes, to me, the numbers. It gives me a pattern against a common denominator. And what do I see? I see how strong energy is, how strong financials were. Simple as that. Materials have moved up some. And what's really weak, technology has rolled over, although it's still in a good position. But long-term staples have been weak. You expect that to do better now with the market under pressure. But look at utilities. They have not really bounced yet. Healthcare, discretionary, weak on the longer period of time. All this stuff is in wealth charts. All this stuff comes as part of the package. None of this is me paying anything extra. If you look at the daily gold, it's really, how do you make money on this chart if you are not a hyper day trader? It's not exactly tight, nor is it trending. It's a sideways market. When I look at it versus the spiders on an intraday 15-minute chart, gold weakened versus the spiders on the 15 minutes. What about silver? Again, in a longer-term downtrend, how do you trade this chart? To me, it's tough to be long silver right now. And you can see here, this is interesting. Silver versus the spider is actually improving, where gold versus the spider has given up some. Well, it'll be interesting to see. I guess they both improved versus the spiders as the market has sold off. All right. The next set is looking at oil, super strong, natural gas. This is a seasonal bad time for natural gas. I had some seasonality in KOLD, which I played, which I'm out of now. Maybe I should have kept it going. But you could see how natural gas sold off. This is on the daily here. The big sell-off here, and then it's rallied. And then the bonds and the 10 years are going to go opposite. So I really like programs that give me the ability to do multiple different things, and it's all built in here, and we're going to come back to this. Now, one thing I haven't found yet in wealth charts are my expected move charts, and you could see that the futures, the E-minis, the NASDAQ futures, the Dow futures, the Russell futures, the VIX futures, and the dollar futures, they all closed within the expected move on the week. That's supposed to happen on the individual things about 80% of the time. We did see some craziness in the NASDAQ. As you can see, it actually traded to the top, start of the week by trading down to the bottom and having a big reversal, and then traded all the way up to the top and came back down and again had another reversal day on Friday. The little nubbing that you see on the futures is because I'm doing this on Sunday after the futures have opened. So not a whole lot going on there. Now, traditionally, I like to look at the market within HGSI with the top-down view. So let's look at that very quickly and see what's dominating. And what I see is oil, gas, commodities, TBF, so short, the 20-year bond, semiconductors, that's nice to see. ARC Israel, IBD 50. So a lot of growth-enabled things came up there. So is that the beginning of some improvement? Let's take a look. Again, the S&P, you could see it is, I could draw the trend line, maybe I will, to see if it looks as good as it did on the futures, it may or may not. And it kind of does. We've got a trend line support on the S&P right there. So again, could be a place to bounce. And then just for completeness sake, because I like to do this, what is my three-road scenario? One is it goes out and takes out new highs. Two is it breaks down and approaches the 200. What I think is likely to happen is for it to bounce around this trend line like it's been doing for some time. So that's the S&P. I don't need to spend much time on these. We've already looked at them in wealth charts. The Dow, worry about double tops perhaps, but it's sitting on the 50-day moving average and the on the 50-day moving average with a tail here, so sort of a good place to expect a bounce. The Russell, as we mentioned before, is coming down and getting near the bottom of the box. And then the NASDAQ here is sitting right on support. Support, 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 support. I think there's a really nice chance it could bounce. In fact, if I was to just jump in here and put up some of Sager's really cool stuff in TradeStation, let me see if I can find it. The resolution's messed up, so it might not work right. It's this one here. Notice that all my futures are sitting on trend line support areas, and these are auto-generated, so they're not curve fit trend lines. Now, going back down, I mentioned the IBD 50 looked a little stronger in the list, but it's come off its bottoms, but really not that much. And then the FANG, microsector FANG, you can see it's bouncing here on the bottom. And then if I flip over and look at biotech, which has been extremely weak, starting to bounce perhaps. Here you had a green candle low right there at the low jump. This is a place that you might expect to bounce. Too early to say it's going to bounce, but man, has the biotech been clobbered. And we saw early up on the top that the semiconductors are looking good. And you can see the semiconductor average, again, sitting on the 50, had a up day. Looks like a good place for it to bounce as well. I mentioned the dollar was weak. Just want to point out on the weekly that even though the dollar sold off on the week, it's been strong of late, but it's only in the middle of its range. This was the March of 2020, February, March, where we had just crazy swings. And I already said gold was not looking too chipper. And you could see here, if you want to be bullish, it's above the averages in the squeeze, but it's sort of not doing anything. Now, historically, I look at industry groups within HDSI, and I'm going to just show you what I do, but I'm going to jump to wealth charts because they really up their game. So the things up at the top, using top down, let's go on 2-day force. And you can see I got 28 to the upside. I have in the short term only 11 to the downside. So that would tell me the short term bias is bullish. Got oil, semiconductors, oil, semis, banks, pharma, entertainment, cruise lines, midstream. So a lot of these are back to anti-COVID plays. Energy goes up, one, because of inflation, which is why I've got so much energy in my portfolio. But two, if COVID goes away, increased consumption will be likely. Semiconductors are some of the good tech, but we know that tech as a whole, especially small cap growth, is doing poorly. Now, the challenge right now is finding these stocks that are not oversold or overbought. So in energy, this is the story of the weekend. That looks great, but it's had a big run. Maybe too late to buy. That's Pioneer, Occidental, ConocoPhillips, EOG, Marathon. And the sense that you're getting here, or should be getting, is these look great, but they're all up at the top of the high jump bar, and the time to buy them was down here. So it's tough to, you want to find things that are priced right. You don't want to pay too much, especially in a top-heavy market. In semiconductor manufacturing, Taiwan Semiconductor earnings are out, I believe. Yep. And it had a Bible gap up here and looks great. If the market holds up, this thing had based from March until January. Applied Materials, more of an uptrend. Lam Research, is it ready to run again? So these things look pretty good. KLA 10 core, similar pattern. Integrated oils, the banks were interesting because the small stock cap banks are probably the ones that are going to get the biggest benefit of the raising rates. And you could see that, and as I've said multiple times here, the way I like to play these sometimes with an ETF, and KRE is the ETF that I've been holding on to right now. When do you want to buy him? You want to buy him here. You want to buy him here. How are you going to find him there? Well, that's my whole talk tomorrow at the wealth charts. So I typically go through, and I did that this week as part of my usual review. And then I create a buy watch list, which you can see here. And it's what it's called. It's a buy watch list. It's not a buy list. And what I do with this list is I'll show you what I do with it in a second, but I will put down a different view here, look at the industry groups, and you'll see that I'm in just a few industry groups, and many of these are the groups that are leading. The casinos are interesting right now. Sounds like Macau is starting to ease on them a little bit. So I take that group and I will look at all those charts I already have. Certainly not going to do that tonight. But if I go back into wealth charts, and this is really cool stuff. Now, there is sort of a black box here called, well, to me it's a black box. It's not really a black box. Come on, there we go. And that black box is called Wealth Scanner. And it's a black box because even though I've got to be friendly with Rob and I've had a lot of phone calls and conversations with him, I still don't know what goes in the black box. But the black box assigns a rating to the stocks. And I could look at the entire universe of stocks. I could look at sectors, whatever I want to look at. And I could look for bullish and bearish plays. Now I can go into here and say, you know what, I'm a short-term kind of guy, not really, but I'm more of a daily guy than weekly. So I'm going to make this a little bit more weighted to the shorter time frames. I'm not sure it's going to do much of a change. And ultimately, the stocks that are moving on a shorter time frame, not just the weeklies, are going to come to the top. Now, like everything else, when I look at the best stocks, I'm going to find stocks that have probably had a big uptrend, and I'm going to be looking for stocks that are perhaps setting up in a better place to buy. AbbVie has been on this list for a long time. I gave it over here back in December when it met my constellation of things that I like to buy. But this gives you a sense. So I could take my weekend buy list that I had, and I could throw it in here, my buy watch, and it's going to come up with what are the best stocks on that list. And this is by the algorithmic scores that they do, encompassing technicals, fundamentals, different trading systems. So the top one was Micron, and I typically will now go through these and I will look at them to try and understand are any of them at good buy points. Now, spoiler alert, if you have wealth charts, you don't have it yet, but here are Jeffrey's dots now incorporated, 3 times of the bongo, which I was involved in developing, and then my version of the high-low oscillator, which is built upon what I learned for the high jump bar. And why? Because this is the stuff I use to trade. Now, there are other indicators that I like, but frankly, I can do almost every trade I do using that constellation of indicators. So I might want to flip through these and see if anything is more closer to setting up that I might want to take. So I can start to rank my stocks on my buy list using the algorithmic thing in Wealth Scanner. And now nobody has this yet. It's coming. I can look at the CAT scanner. Why a CAT scanner? Because what am I? I'm a doctor. What kind of scans do I like? CAT scans, especially if I own the machine. Well, I don't own the machine, but I do have this. So imagine if I take my buy watch list and I throw it in here, and now I can set up my scans various ways, and I'm going to be able to, and this is secret because it's not out yet, but I'm sharing with my friends here first. I can look at various signals and get a sense of which stocks are timed now. And it turns out something that's not an HDSI that I've never really given to anybody, well, maybe a couple of people. I have an indicator that I call my EMS, my early movement system indicator. And notice that Melco, which is one of those casinos, comes right to the top on my EMS indicator. The Bondo daily and weekly are bullish, which means it's in an uptrend, at least on the short term, which is interesting. So if I look at Melco on a weekly, hard to believe it's in an uptrend, but I guess it really depends on what your time frame is. And I've got seasonality there. I guess it's coming off the bottom. That's a surprise, but I know the calculations that are in here. But what a big move. You could see only 2 time frames here. Sometimes you'll get 3. Let's see if they're turned on. So this is still in beta, and so I'm still working on it with the group. And it may also be there's not enough data here to give the monthly one. But the bottom line is I had a bunch of the impulse indicators, 4 impulse indicators, fire on Friday. I had a PSAR reversal. The only thing I was missing is I wasn't in a squeeze. So I can start to understand what's going on here using the indicator sets that I like to use. So not only can I rank things with the wealth scanner, I can toss them into my scan or some of the other scans. One of my favorite things that Rob has is called TRP scanner. And this is a trading system where, for example, let me make it less detailed here. These are stocks that he has that have new bullish setups. And not only do they have a new buy signal coming in here, but they have targets, they have stops that will come in as well. So this is my buy watch list applied to different systems, which I think is extremely cool. And then I mentioned, well, I'm not going to even show you that because that's even more secret. So I'm very excited by this platform. I am going to eliminate some of the things that I use. I'm still going to use HGSI. I've been using it for 20 years, but I think you're going to see me moving more and more on these videos to using wealth charts when I can. It has some great tools and a very nice user interface, and the data is updated for me. So on that note, let me just look at, let's see, here was one that I was going to look at for tomorrow. This is Conagra, not typically where I'm usually buying because it's a staple stock, but if I think there's going to be further weakness in the market, I have forced kahuna, which you guys know what that means. It means I got a kahuna and the force in the same direction. I've got a MOBO breakout. All 3 bongos are green. I had decent volume. I took out the 200-day moving average. This might be something I'll look at tomorrow. And notice where it's sitting in the scan. Another one that I was looking at, let me see if this is the right one. In the mining world, HEES, big run up, pullback, sideways move, coming out of a squeeze. I may not be buying it yet, although it did have my early market signal here, early movement signal, but I'd be looking for a breakout above this level. So have a great week. I hope to see you at the wealth charts. Took 5 more minutes off. I'm going to get down to 30 minutes if it kills me. Bye, everybody. Have a great night.